and welcome to Markets Today. I'm Lata Venkatesh and with me is Surabhi Upadhyay. It was a fifth consecutive day of losses on the bourses. The Nifty losing another 70 points and taking the 5-day toll to almost 500 points. That's about 6% lost in 5 days. There was actually nowhere to hide. Most sectors were ending lower. And what's worse, the advanced declines once again ended in favor of more declining stocks. Hi, sir.
Hi, Lata. Yes, and no sign of buyers coming back to this market despite 5 consecutive days of fall. Lots to talk about over the next half an hour. Let's start with the headlines. Markets remain in sell mode on FII taxation and earnings woes. The Nifty gives up 0.8%, closing below 8,400. The Sensex falls 200 points. Pharma and FMCG stocks lead the declines. Pharma falls 9% after Daiichi sells its entire stake in the company via block deals.
Well, speaking of earnings, HCL Technologies misses estimates on all counts in the March quarter, with dollar revenue stagnant and a bigger than expected fall in EBIT margins. The management, however, strikes an optimistic note, saying that the year's deal pipeline looks better than previous. The stock recovers from the day's low but still ends 4% low.
And staying with IT earnings, Wipro largely meets expectations. Dollar revenue comes in marginally lower at $1,774 million. But margins beat expectations, rising to 22%. The company guides for a fairly muted Q1, saying that revenues could be between 0.5% lower to just 1% higher.
The mid-cap index falls 0.7% in step with frontliners, with stocks like Bata, Crompton and Apollo Tyres losing between 4 and 6%. Tata Sponge falls 9% on dismal earnings. However, Lanco Infra gains 8% after completing the sale of its Udupi power plant to Adani Power. Well, those were some of the street signs that we picked up. And here's a check on all the big voices that we have lined up on the show for you today. Global market expert Mark Mobius, the ultimate investment guru, speaks to us on why he is still bullish on Indian markets, while Sandeep Bhatia of Kotak Institutional Equities will join in to talk about the ongoing earnings season and the near-term trend in markets. We'll also get you the managements of some of the companies that announced their quarterly numbers today.
All right, before we get to all that opinion, let's tell you what happened today. There is simply no stopping the bears on the last street. Markets fell for the 5th straight day, and once again, the last hour proved to be quite disastrous for the bulls. Anuj Singhal is now here with today's market trading highlights. Anuj, the bears starting to pretty much dictate terms on the street?
Well, the bears are in control of this market, no doubt about that, at least in the near term, even if in the medium and long term you are in a bull market. But in the near term, clearly it's a market which is sell on rally, and every rally, every pullback, every short covering is being sold into. And that's what happened in today's trade. The market kept gravitating towards the low point of the day and finally closed below the 8,400 mark. One good factor for the bulls was that at least the financials outperformed in trade today. The private sector banks have started to see some delivery-based buying. That was the only positive aspect. Sun Pharma led this fall in terms of pharma stocks decline in today's trade. In fact, let's talk about the stocks that led the market down. Right on top, of course, has to be Sun Pharma among the pharma stocks. Sun Pharma itself was down 9%, Dr. Reddy's was down 3%, and Lupin was down 2%. How things have changed for pharma. The stocks have now corrected 10 to 22% in a matter of a fortnight. Apart from that, some other prominent Nifty losers included Hindustan Unilever, which Mark Mobius described as a good stock but a very expensive stock. HCL Tech was down 4% post its numbers, though it managed to recover. It was down 9% first thing in the morning. And Maruti Suzuki was down 3%. That's one stock which hasn't corrected much, so maybe the correction is now spreading. On to cement stocks, they were weak again. This is one sector where you expect really bad earnings, and we've seen both Ambuja and ACC losing out. Ultratech was relatively more resilient. Apart from that, on the gaining side, you had a mix of stocks. Tata Steel, metal stocks did well today actually. Private sector banks did well. Axis was up 1%. And one sector which did well outside the HCL Tech stock was IT. So Tech Mahindra was up, and even Wipro and TCS managed to do well. Apart from that, in the mid-cap space, there were some gainers today. The screen wasn't as bad as it looked yesterday. So stocks like MIC Electronics, Century Textiles, Lanco Infra, all of them were in the green today. But the problem point for the market, again, is the non-index large-cap space. A lot of stocks where valuation could be a problem. We've started to see a lot of correction in some of these names. And today also, Apollo Tyres, Bata, Motherson Sumi. You could add some more names like Just Dial, Apollo Hospitals. All these stocks were losing ground. So for now, it's 5 days of sell-off. this market could be due for a bit of a short covering bounce, but the problem is that every rally is being sold into.
Point taken, Anuj. Every rally being sold into, and well, your note of confidence that at least the financials came out and performed is something that we can't bank on, because the nature of the financials that performed well, I mean, if you looked at it, it's the PSU Bank Index that was the outperforming index. That index will just come up for you. The Bank Nifty is up, but it's not a great deal of private bank performance. Axis did well. ICICI was minorly in the red, and HDFC Bank was not really quite among the winners. It's the PSU banks, the Bank of India, Corporation Bank, Oriental Bank of Commerce, Canara Bank, IOB, UCO Bank. Well, one does not know whether the earnings, when they come, will quite meet the street expectations. So there's always a fear that if the street is supporting itself on this rather lame leg, then chances of yet another sell-off coming look very high. So not only are all rallies getting sold into, even the last legs that the market is standing on, notably the PSU banks, is not a very strong leg at all.
Right, Lata. Well, that's the shape of the market. Let's quickly get some opinion going as well. A big market voice, Mark Mobius of Franklin Templeton Investments, says that he continues to remain bullish on India and that the Indian market looks quite attractive at current levels. Listen in.
We are still in a bull market in India, and these corrections are corrections, not necessarily entering into a bear market. So I would say this provides some opportunity to buy stocks that are reasonably priced. The other good news, of course, is that there will be more stocks coming into the market, more IPOs, new issues, and that will provide enough liquidity for investors to come into the market. I think it's not going to be that much more. There may be another 5 or 10% at most. You must remember, in this day and age, volatility is tremendous. 20% these days nothing. It's a correction. Whereas in the past, 20% used to create panic. Now it's sort of very usual that you get the kind of correction in a rapid bull market that we've seen. So I think you will see corrections, but it won't be that significant. I would say anywhere between 12 to 15% annualized. That would be a reasonable expectation.
That's Mark Mobius, the ultimate investment guru, and you will be hearing slices of this conversation through the day and through the week, and definitely all through the weekend as well. Now, for all the action today from the futures and options space, let's go across to Vainal Bansal. Vainal.
Well, thank you so much. Still another bad day for the markets. In F&O again, the similar pattern continues. Shorting happening at higher levels, unwinding happening at the lower levels on the option side. Look at this, unwinding, we started with 8,700 put unwinding, 8,600 unwinding, and today it was 8,450, 8,500 put unwinding happening in the markets. Highest open interest in terms of put addition has now shifted to 8,200, 8,300, and now you're seeing call writing happening at levels of 8,400, 8,500. It seems that the wall for the market, which one time it was 8,700, 8,800, now has come down to 8,500, 8,500. And on the downside, watch out for 8350 mark. That could be important to watch out for. Everyone has talked about HCL Technologies and Sun Pharma, so I'll leave that apart. But look at HUL. That was one big culprit in the last 1 hour of trade. Stock fell sharply, nearly 4%. Open interest up by nearly 6%. Most of these FMCG counters have been very weak since last few days. Watch out for them. The entire FMCG pack, the entire, auto or auto ancillary pack was also very weak today. Maruti was one stock where we saw fresh selling happening in. Stock was down 3.5%. Open interest was up on the short side. Motherson Sumi was down nearly for 4.5%. Open interest was down by nearly 3%. So some unwinding seen over there. Apollo Tyres, Eicher Motors, both of the stocks were down. Apollo Tyres specifically was down nearly 5.5%. Open interest was up by nearly 4 side on the short side. DLF was one counter which was very weak, was down nearly 5%. And Bata has been trading on a rough territory since last few days. The stock has almost lost nearly 8-9% the last 3-4 days, and the stock was down nearly 4% again today. Two stocks which are holding up, especially in the mid-cap category. Century Textile, which was up by nearly 4%. Some build-up happening in there. Many people expecting some news coming on the board restructuring side. India World Housing Finance, that stock was up by nearly 4%. Some covering seen over there, but clearly it was the entire FMCG led by HUL and entire auto pack led by Maruti, which were very weak in the market today.
All right, Varinder, thanks so much. That's the futures and options arena and how it shaped up today. Let's move on to big earnings then. It was a pretty disappointing third quarter for IT big boy HCL Technologies. It reported a miss on all counts, weighed down mainly by currency fluctuations, mirroring the performance of a larger rival Tata Consultancy Services. In fact, HCL Tech was also one of the major losers on the Nifty today. Kritika Saxena, who has been doing all the number crunching, is now standing by with more details. Kritika, what went wrong?
Yes, Rabbi, you mentioned TCS. TCS just lost on the top line bid, but HCL Tech, as you said, has missed on all accounts. So to top off, dollar revenue has been a miss significantly from what we were expecting. We were expecting dollar revenue growth to come in at least between 2 to 3%, and it's just about, it's down by 0.03%. Even in rupee terms, we've seen a decline of around 0.17%. PAT fallen significantly, down by 12.1%. Now the margin miss, as you said, is the big disappointment, largely owing to the fact that the company's SG&A expenditure has gone up. In fact, SG&A as a total revenue expenditure stands at around 12.7%. So that's possibly the reason. And plus, utilization has dipped at 81.9%. So both these areas have hit margins, falling by around 250 basis points. Now, in terms of the geography breakup, Europe is up by 4.4%, which is fairly decent. But then if you compare it to last quarter, they saw growth of around 7.2%. That's still a negative. America very flat, up by just about 0.2%. Even if you look at the vertical demarcation, financial services at 2.3% is again weaker than what a couple of street analysts were expecting. Retail is the big fall, down by around 10.5%. The company, though, has seen a $1 billion deal win again for this particular quarter, which is a little bit of a positive, a bit of a dichotomy when it comes to what the management is expecting. Management is fairly confident that the deal pipeline ahead is positive. However, yes, there are volatility of currency that are evident across the board.
All right, thanks a lot for that, Kritika. Clearly, after the management spoke with us, the stock, which had lost about 10%, recovered significantly and ended just about 3.5% lower. So important to hear out why the management still is positive.
Currency impact was not 80, was actually 63 basis points.
Okay.
And 40 basis points was the impact on account of the wage increase which happened in this quarter. Okay. Because the cycle of the people who were eligible in this quarter. And the rest are all investments which have taken place. We have increased our investment level. So we will keep on adjusting that level going forward, depending upon how much is needed. If I take a space, I'm committed. I made that investment. I'll continue to incur that cost. But we'll see where we can take cost out from somewhere and invest somewhere else. So this is a very constant exercise and operate within a margin range of 21 to 20.
You're happy with the performance on growth. If you look at it from a Y&Y, as you mentioned, 15.4%, or on an LTM Y&Y perspective, a little over 14% are good growths. And if you compare them with similar growth rates in the same period, in the same quarter last year, you'll see our growth rates have actually grown up minus currency, right? So, we obviously can't predict the currency, but we need to make sure that our engine keeps delivering us a certain amount of growth.
Right, that's the HCL Tech management. IT bellwether Wipro also announced its fourth quarter earnings today. Reema Tendulkar here is with us with her analysis. Reema, how would you rate Wipro's performance? In line, mixed bag?
Well, I think it's a bit disappointing. In terms of the revenue performance, it's lower than what the street was anticipating. Dollar revenues have degrown by 1.1%, lower than the 0.2% growth that the street was anticipating. Constant currency growth in this quarter stands at 1.2%, within the company's guided band of 1 to 3%, but it's coming at the lower end, and it also trails both TCS as well as HCL Technology, even in constant currency terms. The company has managed to beat street expectation on margins, so they've delivered a 23 basis points improvement in the margins on a quarter-on-quarter basis to come in at close to about 22%, and that has been aided by an improvement in the utilization. But between revenue and margins, if the street has to focus on one parameter, it will be revenue, where there has been a miss. Even the Q1 guidance is much lower than what the street was anticipating, at minus 0.5 at the lower end to a plus 1% at the upper end. The street was working with a guidance of 1 to 3%, so that too has come in as a disappointment. The key challenge that Wipro is facing is its reliance on the energy vertical. close to about 16% of its revenues coming from this energy and utilities vertical, where because of the sharp crude prices, we've seen a capex cut, and that is impacting the growth prospects of this vertical. In fact, the management also said that in the energy vertical, we've lost close to about $100 million in revenues in FY15. The other reason they've indicated is that they've seen some slowness in spending in BFSI, which is not yet picked up. So these two could be the challenges for Wipro going ahead. But overall, it's disappointed the street on the growth parameter. The stock has already corrected a bit today, but I suspect there could be a negative bias tomorrow as well. Back to you.
All right, Reema, thanks so much for taking us through that fine print. Now let's hear out what the Wipro management had to say about that performance and their outlook ahead.
On an overall basis, the demand environment remains stable. However, we see uncertainty in two industry sectors. From a portfolio mix, we've been relatively overweight in energy, and sharp cutbacks in capex have impacted us close to $100 million in revenue in fiscal 15 compared to fiscal 14. Despite the structural impact, we have scored significant wins in large oil majors. Our utility business has been a bright spot that has grown rapidly to narrow the gap for our overall E&U business unit.
All right, on that note, time for a quick break, but coming up on the other side, Sandeep Bhatia of Kotak Institutional Equities with his take on the markets, and we'll also get you all the details on that Sun Pharma block deal in which Daiichi sold out its entire stake in the company.